For more, let's bring in Brian Chappatta, who is our Bloomberg opinion columnist. I think one of my favorite quotes, Brian, is from Chris Ruppy at FUFG, who says she will no longer be able to shy away from pesky questions about the dollar and fiscal policies. What do we know, of course, about her views on this and any takeaways from her time at the Fed?
Yeah, well, I think what Janet Yellen and as well as Jerome Powell, I mean, they had both overlapped quite a bit during their respective tenures. And I think both of them have really shifted a bit as of late when it comes to these questions around deficits, when it comes to questions around do you raise interest rates when unemployment's falling, or is there room for unemployment to fall further? Are there other metrics that we need to look at? So there's been a little bit of a shift there, and it's reflected in the Fed's inflation framework now. They want to let inflation run above 2% for a while to overshoot. So there's been a lot that they've evolved on over the years since Janet Yellen stepped away from the Fed. So she's going to come back in, and I think you can expect for her to be in complete lockstep, obviously, with the Federal Reserve and pounding the table for more fiscal stimulus from Congress.
Okay, so interestingly, that wobble that we saw last week, the worries that we saw a divergence, which we haven't seen for a long time, between fiscal and monetary policy will come back into bear. What about her pragmatism when it comes to economics? And you sort of talk about the shifting stance on how deficits should run. How can we see her evolve her macro and micro viewpoints, do you think?
Yeah, I mean, I think what she's really going to be focused on, she's a labor market economist first and foremost, and I think they're bringing her in to fix the labor market in a similar way that Barack Obama brought in Tim Geithner, who was the head of the New York Fed when there was the financial crisis, because that was he was obviously instrumental in dealing with the banks, and so brought him in to have some expertise, and now you have Janet Yellen coming in to kind of figure out how the U.S. labor market's going to hum after this unprecedented pandemic economy that we're still trying to figure out how to navigate our way out of.
I want to talk about the relationship between the Treasury and the Fed. Brian, another quote that I'm reading is that it is for sure now that the programs that were expiring December 31st will indeed come back, because she knows that the Federal Reserve doesn't just execute policy, it's communication, right? It's about how the policy looks to the public. Just having that bazooka there means that maybe you won't actually have to use it. Do you agree with that?
I think it's a little bit more complicated than that. There's certain restrictions within the CARES Act that won't allow the Fed to basically get any new money to make loans. So if the Fed is giving back all of the money that the CARES Act allocated to it, and then it's reappropriated by Congress, it's going to be a little bit harder for the Treasury to simply flip that switch back on. I'm sure there are ways to get around it, but it might require some more congressional appropriation. And as we all know, that can be a heavy lift, and it's full of politics. So it's not going to be a switch. I don't think that Yellen's going to be able to flip back on immediately, given that Powell said he's going to give all the money back.
Interestingly, of course, your column today was on the Fed ETF purchases have changed markets forever. How do you think someone like Yellen, and indeed the ongoing focus on how the Federal Reserve has sort of leached into market dynamism and market workings, talk to us about how the Federal Reserve has sort of upended markets and whether that's likely to be here to stay?
Yeah, I mean, I think when you have Janet Yellen, a former Fed chief and former vice chair as well for 4 years, heading up the Treasury, you can kind of bake in that it's going to be a Fed-dominated narrative for a while here under the new administration. The Fed has basically said we're going to backstop markets time and time again. That's what we can do. That's what we will do. That's how we see our role in improving the economy. So I think you can expect that more going forward. And to the ETF purchases, I mean, that was very swift, very dramatic, and you saw corporate credit spreads narrow so fast in March and April because this came out of nowhere, and the Fed just came in and said, we're going to intervene directly in credit markets if we have to get this back on track.